How's it going, everyone? In this video, I'm going to show y'all how I trade trend, what I look for, how I identify my entry, where I set my stop loss, my complete thought process. But before we get started, be sure to subscribe to my channel, click that thumbs up button, click that bell icon so you don't miss on any of my upcoming videos. So, I want to start off by saying I'm going to give you a few different examples in this video. I'm going to show you how I like to find intraday trend, which is not the bigger picture, but how I would enter intraday trend and how I would possibly enter, a higher time frame trend, okay? So, I just want to point out what I look for. This is kind of a retest, but basically that's how you're entering off a trend, right? You want to see a break of structure, pull back to it for a possible retest, higher low entry, right? We're trying to get an uptrend entry. So as you can see here, I got this marked out gap fill here, but because it's a current trade I'm watching for the upcoming week. But what I want to see is a break above structure. See, we broke this structure. We're going to come back down, retest, okay? Now let's move over to the 5-minute time frame so I can show you exactly what I'm looking for in the price action. Oh, this is actually a trade I did. I made money off this trade, but I entered a bit early. If I could go back, I would have waited. Hindsight's 2020, right? So we had a nice break. This is opening 5-minute candle. A nice push up, broke that structure again, come back down. Now, this was when we come back down and retest here, right? We come back retesting this previous resistance area for a possible call entry. Now, it never hurts to wait on a nice reversal candle or indecision candle, right? That's what you want to see. Maybe indecision, reversal candle coming together for a possible entry. Your stop loss should always be below the bottom of the candle that, confirm the trade for you. So say always. Some people have more risk. Let me explain that really quickly. Some people have different risk tolerance, different game plan. For example, we're never supposed to risk more than 2 to 3% of our overall count. Some people only enter a trade with that amount. So they're willing to risk all that because that's within the risk management plan. Me personally, I enter with more than that. So I have to create an exact level to stop out in to allow for the proper risk to reward. Keep in mind, you want to try to shoot for a 2 to 1 minimum risk to reward. That being said, the purpose of this video is not to teach you how to set up a game plan, it's to show you how I trade trend. So let's get back to it. So if we did wait on confirmation, we wait on this candle confirm. This would have been our entry point here. Stop loss down here. As you can see, it played out perfectly. My price target would have been a break of this hive day. That would have been one of my main price targets. When I enter an uptrend, one of my price targets is always previous hive day. Okay? Keep that in mind. Once I get into a SPY trade, I like to allow my SPX levels that I create over the weekend, basic support and resistance, to act as my price targets off these trades, especially when you have nice strength like you can see here on SPY on this day we did. My exact game plan this day was uptrend entry on SPY. So I want to look for uptrend to get calls to play the move up. We opened above that prior day close. That showed me we already had relative strength, right? So we got in, we got our stop loss set. As you can see here, played out. Could have been your first price target here. Next price target should have been at that nice resistance on SPX if you have one relevant. Some people use persons pivots for targets, fibs for targets. I'm talking about price targets. But me personally, once we get a nice push up, if I had to put a number percentage on my first trim, it's typically 20 to 30% in profit on the contracts. What it usually works out is not that I'm always watching my P&L, but the way I trade, I've been trading the same way for so long. The way I've, my execution, it ends up like that. Honestly, it really pays us to hold out on these nice price targets for the proper risk to reward. So if we entered here at 424.7, we trimmed up here at 426.39. That's a nice move, especially in the options trading world. Them premiums would have moved nicely. Make sure you're choosing a strike that has a high delta. I like to trade at the money strikes. So if we entered this trade right here at 424.7, I would have went with a 425 call option, okay? Would have been perfect, right at the money. The delta would have been nice. I would have got a nice return if we moved up. Now, that brings me to the topic. Do I trade same day expiration when trading trend? That's a very simple answer. First 2 hours of market, I trade 0 DTE, okay? If I'm enter a trend off the 5-minute time frame, lower time frame, I'm on 0 DTE. If you're looking at the hourly, you're entering trend off the hourly time frame. If that's what matches your trading criteria. If you prefer the higher time frame, you need to use further out expiration, because if you're going to trade any amount of time and you're trading same day expiration, theta is going to destroy your premium. Okay. I hope that gets the question of should I use 0 DTEs out of the way. Always feel free to use next day or even a week out. If that's what makes you more comfortable, do it. Me personally, first 2 hours of market, I'm using same day expiration, okay? So we know what we're looking for basically on a 5-minute uptrend or a retest entry. I didn't really see a whole lot for a pullback here. Do not really see a possible second entry on this chart. Let's look at another example on SPY. Now, let's talk about a different situation because, for all of us that's been trading for any amount of time, not every trade is the same. We can catch calls for a possible uptrend entry, but it can look a little different. This is a very good example of that. See, this is the opening 5-minute candle here on SPY. And immediately we come up, pull back, retest off that second 5-minute candle. So 10 minutes in, we're already retesting this area. So once we retest, we could have, anytime you're trading the first 15 minutes, it's going to be a little higher risk, sometimes a little quicker pace, okay? So if we got in here, one thing I like about this, you do not see a huge increase in selling volume. So I would have possibly gave this a shot. So pull back, we got in calls here. Stop loss should be below that first 5-minute candle, which is really tight. You wouldn't have lost much money at all if we actually caught the bottom of that candle. So stop loss here. We got calls here off this pullback. First price target, half day. And then the next price target for me would have been that next big resistance on SPX, okay? Or if I seen, price action looking like we're wanting to come back down, or if we had data drop that may influence how long I hold this. Sometimes I do not like to hold through data or big meetings once I'm in a trade. Just trying to give you my complete thought process here. Not everything's an exact science. I'm not going to sit here and tell you my execution is always perfect. It's not. I do mess up still, but I document it. I have discipline to stop out where I need to stop out, regardless if I, should have sold, whatever happened. I do get out of the trade when I need to. And that's very, very important. We have to overcome the thought like, I'm going to hold this, we're going to come back, I'm going to move my stop loss, this is going to come back today. Especially if you're in same day expiration, that one thought can destroy your account. Have your game plan. If your stop loss is right here and you enter here, if it hits that, you stop out. You're going to have losing trades. It's okay. I know as humans, we don't want to lose, right? We hate losing, whether it's a ball game, losing money in the stock market. We don't want to lose. But if you're in this for the long run, if this is long-term income to you, you have to stop out. Losing days happen. Let's keep them small, keep our winners big, right? So you're probably thinking, you didn't see a whole lot of reversal candle here, right? And I do watch the 5-minute. Sometimes when you take a trade off the open like that, when you're looking for that quick pullback, it's higher risk. Like I said, right? Got in. Not a lot of reversal candles here, but one thing I did like about this trade, even though there wasn't, many candles to give us signs of a reversal, we did risk the quick pullback in calls here. We did have good steady volume, right? We had, as you can clearly see down here, let me just pull this up where you can see it better. How's that? Volume held steady. Buyers were clearly in control, right? That next candle that really exploded, that's where we got the big move up. Now, I'm gonna show you a higher probability trade. And I want to point one more thing out that I kind of left out of the first example. Let's go back to it really quickly. One more thing I like to see when I'm looking for a nice reversal candle. I like to see that long wick down when I'm looking for a possible entry. That tells me that the buyers are clearly in control. They pulled that price way back up there. Something I can't, I've noted in the past with my trades. Just wanted to point that out before I moved on to our next example. I do not want to leave anything out. This is just my thought process. This is not no exact order. I pretty much want you to experience what I'm thinking while I'm trading this, okay? Now, target. You can clearly see target has been on a downtrend on the hourly time frame. This is hourly time frame. We're downtrending, right? How do we identify a downtrend? We're making lower highs and lower lows, right? You're identifying an uptrend. You're making higher highs and higher lows. Take note of that. So how do we enter off a higher time frame, right? What are we looking for to catch a longer term trade in a trend? Let me give you my thought process. This would be a possible entry, right? we broke structure here, come back up, retest. For me, that wouldn't be it. I just couldn't do it. As far as a longer term trade, I would possibly day trade that, yes. But for me, when I'm looking for a nice entry, I love when I see a nice double top form on the hourly time frame before the continuation. So we come up, retest. We could have got in here and made some money, right? But if we're in a longer term trade, if our expiration's on out, we wanna really capitalize. So I like to wait on that nice double top, then a possible entry once I see a nice sign that we're gonna downtrade. I like how we had this wick up here. We never did break above that previous lower low. We could have entered possibly off this candle here to move all the way down. So you're probably wondering, like, how do I know when this trade's over? Where should I set my stop loss? It's a very good question. For me on this trade, I would have personally set it. Let's see, if our entry would have been, let's say our entry was around this 151.6. Probably would have set it right here above this 152.9 on this swing trade. I would have handled it personally. If you have a little risk tolerance, you could have waited till you broke above this lower low, as you can see here on the hourly. But double top, I love to see that. People watching this inside team will probably know I rarely swing trade, but I just wanted to give you this example. If I was to take a trade like this, honestly, I'd have set my stop right here. I wouldn't have been willing to give much back on this trade. As you can see, it wouldn't have made a difference. It's just never look back. Huge move to the downside. This is not your typical downtrend entry. It doesn't usually happen this quick, but perfect example of a downtrend. When we're looking for a downtrend entry, one other thing I like to see a nice, we made a double top here, but I like to see a nice aggressive move back up. I like to see the buyers getting control off of this lower low, push back up. That's where I like to take my entry every time. I like to see, buyers aggressive move up, take my short. When I say short, I'm talking about put options. So real quick, let's talk about what option we would use on this trade. So me personally, let's take a look here. We're trading Target. Keep in mind, stocks like Target, Walmart, they do have liquidity on their options, but they tend to have worse spreads. So be cautious of spreads when choosing. Another thing, let's say I entered, let's say in this 150.4 area. Personally, if you're in a swing trade, you can go a little further out, but I would have still went with that 150 put option. When you're trading stocks where the spreads can be bad, the whole numbers typically have better spreads. It's just they usually have more volume, more interest, something to keep in mind. And honestly, I don't know if I could have included anything else in this video. 9 times out of 10, I'm watching the 5-minute time frame to confirm intraday trend or on a retest trade. I'm a day trader. I like to scalp or day trade. Do not swing trade often. When I do, it has to be high probability. It has to match my criteria exactly. But that being said, this would be a good example of a good swing trade. Anytime you can enter trend off the higher time frames and confirm, especially if you can confirm like hourly, daily, weekly, it's going to be a high probability trade if you can, get that sniper entry on that trend. If you have any questions, you feel like I left anything out in this video, I would love to, get your feedback, DM me personally, try to help you out. If you like this kind of video where it's kind of my thought process instead of like I'm teaching a class that I planned out for 30 days, I want to give you my thought process just like I'm in a trade. Okay. Appreciate you all for watching, and I'll see you next time.